Hello, everyone. This is Godofredo Vidal from Actinver in Puerto Vallarta. I'm really pleased to have you here today on our semi-annual conference that we're having today. Most of you have already been to one of these events. Today, we're going to talk about the outlook for this 2021. And we have with us Enrique Covarrubias, which is the Chief Economist for Actinver. And we will also have Diego Tarraz, CEO of Asset Management in Actinver. Just a brief description for those who have not heard about Actinver, or just as a refresh to the rest who are clients of us. I would like to remind you that Actinver is in the private banking business in Mexico. We are a 100% Mexican investment firm. We have different investment products to offer to our clients through our brokerage house. You can buy, obviously, stocks and different investment funds. We also complement this with our products, our other services such as insurance, loans, leasing, the banking services, obviously that comes really convenient when doing your business as foreigners here in our country, through the online banking, the checkbook, debit cards. We also have the area that focuses on the stock market and economic analysis. As you know, this is our 25th year in business, so we're really proud to be with you, to be close to you. We'd like to continue with this relation. And now I'll give the microphone to Enrique, who is gonna talk about his analysis to this 2021. Go ahead, Enrique, please.
Thank you, Godofredo, and good evening to everyone that is connected today. What a year has been, and it's only the beginning of February. There have been so many economic and political movements on top of everything that we know with COVID. So hopefully we can try to explain in detail our vision for the rest of the year, what we expect for the Mexican economy, and in general what we expect for the global economy, and how we are seeing markets developing according to these forecasts. Just a quick reminder that we are using both our WebEx platform and YouTube channels. So if at any time during this conversation you have questions, please do go on and type them, and we'll try to answer them, some of them as we go and some of them towards the end of this presentation. So let me try to share a presentation. To the organizers, can you please give me permits to share PDF documents? Just one moment, please. Another moment. Any minute now. Okay, I got it now. So let me share this PDF presentation. And as always, the contact details for the economic research team are on the first page of this presentation. But of course, you're very welcome to send an email to your financial advisor, and we will be very happy to send it in a few minutes. Right. So 2020, what a year it was. We almost have all the economic information to finally give the final numbers for growth, economic growth around the world. Not yet, because final figures will be published until late March, or in some countries until April. But if you see the first graph towards the left of your screen, you can see on white colors the final figures for 2020. It has been one of the worst recessions in modern history. For the most advanced economies, like the US, which happens to be among the best performing countries last year, it was a contraction of 3.5%. But take a look at other of the advanced economies. Japan minus 5.3%, Canada minus 5.7%, the European Union as a whole 7.6% negative, and the United Kingdom, that on top of COVID and on top of all the populist movements that we have seen over the last 5 years, they were also in the middle of a Brexit, of a very difficult fiscal, economic, and monetary divorce with the European Union, with a contraction of 11.2%. And in general, emerging economies also seem to have faced one of the worst years in modern history. Almost 9% contraction in India, 8.5% in Mexico, Brazil 5%. And the one country that actually managed to grow in 2020 was China, 2.3%. Maybe it's remarkable that for most countries around the world, 2.3% happens to be a very good year. And for China, in the middle of a pandemic, they managed to grow. Going forward, in particular for 2021, I'm rather surprised about the heterogeneous numbers that we are seeing across markets and across research teams in financial sectors and in international organizations, where we see some of the most important economies, mostly because of a demographic bonus like India and China, growing not too far away from double digits. But the true motor of growth for next year will be the United States. Now, these numbers might be rather high if you take them at face value, because if you see, for instance, Canada, 4.5% growth in 2021, it looks like a remarkably good year if you only take a look at it at face value. But remember that, for example, Canada, I'm using that as an example, last year a contraction of close to 6%, and in 2021 only growing 4.5%, means that during 2021 it will be a country that will not have reached the same levels of economic activity as previous to the pandemic. And actually that is true for most countries. So on the right-hand side of your screen, you can see the first moment in time when we are expecting the most important economies in the world to reach the same levels of economic activity as pre-pandemic levels. China already did so. The United States will be the world's leader in 2021, reaching those levels maybe by the third quarter of this year. And towards the end of next year, 2022, we will see most of the economies reaching that level. The few exceptions among the largest economies that we think that level of growth is not going to be reached right away are the United Kingdom, because Brexit is creating many problems, particularly for investment, Japan, that is trapped in a bad cycle of low innovation and low growth, and Mexico, which is among the emerging economies where domestic consumption doesn't seem to be the main motor of growth, and it's one of those countries that as long as the U.S. is growing, as long as its main trade partner is growing, we will expect the Mexican economy to grow, but domestic factors will probably be hindering this growth going forward. Now, 2021 has started with restrictions to social mobility. These two graphs were extracted from a great webpage. If you haven't seen it, I highly recommend it. It's called Our World in Data. It's a webpage that is managed by a research team at the University of Oxford. They have lots of these interesting graphs. And for example, the first of these graphs is an index of social mobility restrictions among the largest economies in the world. You can see, for example, that in Germany right now, there is an 85% restriction to mobility. And that's exactly what it means. Only 15% of what is normally usual in the German economy is happening at this moment. And it is the worst moment of mobility since the pandemic started. It's even more restricted than at the worst time during March, April, and May of last year. And this hindering of mobility is true for most economies around the world. In particular, in the Western Hemisphere, we know that December is a usual time for families to gather. There's Hanukkah, and there's Christmas, and there's New Year. And all those things combined into a situation where the beginning of this year, we saw a very important rise in virus spreading, and most governments around the world needed to face some very tough restrictions during the month of January, and we are expecting, unfortunately, for this to continue until late February and probably until March. If you take a look at the right-hand side, maybe that's just a simple example of what we are seeing happening in recreational activities, which is a very important sector in many countries around the world. But the case of Germany, for example, is rather striking, where close to 60–70% at the worst time in 2021 was the drop in recreational activities overall. Let me skip a few slides and go here. What is happening at the beginning of this year? Mostly in terms of market developments, it's a continuation of what we saw during 2020. Economies are not open. Economies are having a very hard time to produce economic growth domestically. And what we are seeing is governments issuing debt and giving these resources to families and companies. Now, this debt, somebody has to buy it. For the most part, it happens to be central banks around the world in a smaller amount, but also important, has been pension funds and investment funds and private equity firms that have been buying this debt. But the amount of resources that central banks have been printing to buy government debt is completely staggering. Just to give you some initial numbers, the amount of debt that the U.S. has issued over the last 13 months, well, in particular over the last 8 months, amounts to around $10,000 to $12,000 per person in the United States. And that's only one central bank. If you take a look at the European Central Bank, it's about $7,500 per person. In the case of Japan, it's close to $12,000 per person. We have never seen this amount of liquidity in markets, and with so much liquidity, we have seen that all kinds of markets, whether it's stocks from emerging markets or currencies from markets, including Mexican peso, have been gaining a lot of traction in recent months. And actually today, still in the first week of February, again, we are seeing markets around the world reaching historic maxima. Now, the U.S. being among those countries that has been issuing debt at the fastest level that we have seen in history, this amount of dollars in the market has been causing the U.S. dollar to lose its value at a very, very quick speed over the last months. Take a look, for example, at the graph all the way to the right of your screen. This is an index, a very common index followed by market analysts like myself, which is called the DXY. It's the US dollar compared to a basket of the most important currencies around the world. And it's an index that over the last 50 years has oscillated around 100. That's the average over 5 decades. When the crisis started, what we saw is that markets around the world, well, they didn't know exactly what to do. Everyone was searching for a safe haven. The natural safe haven around the world is to buy dollars, and with those dollars, to buy U.S. treasuries. And that caused a very important appreciation of dollar around the months of February, March, and April of last year. But as soon as the Federal Reserve and the Treasury in the United States started to inject this liquidity into markets, what we saw is that this amount of resources tries to find yields somewhere else. And as I was mentioning a few moments ago, these resources happen to go mostly to emerging economies. And we saw, for example, the Mexican peso going from 26 pesos to the dollar at the worst time of panic during the month of March of last year, going all the way to 19 and something last month. There is an expectation, of course, that the U.S. will continue to print money, and that is going to cause even more forces for the U.S. dollar to continue weakening against most currencies. I'm not saying that all currencies are going to appreciate. In particular, I'm not saying that the Mexican peso is going to gain any traction during 2021, because some countries like Mexico are going to be facing important challenges this year. In particular, we are going to be in the middle of an election cycle. It's a normal election cycle. It happens every 6 years for the president, but this time they are internal elections, so we are only going to be renewing the lower house, most governors, and most local parliaments during 2021. But I'll talk about that in a moment. Let me go just here. We all live in Mexico. I know that we are going to talk about international markets, and Diego, as the CEO of Actinver's asset management team, he's going to be talking about some investment opportunities. But since most of the people that is connected here today, we live in Mexico, I think it's worth just spending a few minutes talking about the vaccine rollout that we should be expecting in the country. Mexico is one of those very few countries that right away decided to search with laboratories around the world to buy vaccine contracts. And Mexico at this stage has already purchased the equivalent of 1.2 vaccines per person. Around the world, this puts Mexico comfortably among the top 10 countries in terms of vaccine coverage. The problem that Mexico will be facing going forward is that the rollout of these vaccines seems to be rather slow. While some countries like the United Kingdom, you can see it here on the graph on the right, already at this stage, 10% of the population has received vaccines. In Mexico, it's only 0.5%. That is equivalent of only vaccinating first-line health workers, some of second-line health workers, and basically nobody else. Now, this rollout supposedly needs to speed up over the next weeks. And the main reason is that you can see here in this chart that most of the vaccines that Mexico has signed among, let's say, the most reputable laboratories are from AstraZeneca and Pfizer. Pfizer is the vaccine that is already here in Mexico, but it's a vaccine that is very difficult to distribute and to transport in general. It requires refrigerators to be at a level of close to minus 70 degrees Celsius. If I remember correctly, I think it's more or less the same in Fahrenheit, minus 70 degrees. So it's one of those vaccines very, very difficult to distribute at a massive level. The next of the large contracts that we are supposed to be receiving in the next months is from AstraZeneca. That's a very easy thing to transport. But I'll show you in a moment the calendar of how this rollout is going to happen. And to save some suspense, we are not expecting them to reach Mexico until late March or maybe April. And that is why Mexico needs to sign agreements with maybe some less known labs, including CanSino, which is a Chinese company, and Sputnik, which is a Russian company. For those of you that are interested in natural sciences, I'm not, I just read on the news, and my little understanding of it is that Mexico required the Sputnik vaccine to be published among the most prestigious academic journals, so it could be reviewed by international scientists. They published these results in a very good journal called Lancet that has an even higher impact factor than the most reputable journals like Nature or Science. So it already has a relatively good reputation, and it's already going to be rolled out in Mexico over the next weeks. The calendar of distribution is relatively unknown. These are, rather than promises, these are more like expectations or some good wishes of how it will be happening in Mexico. But you can see that during the month of February and April, we think that these vaccines should be reaching the population with over 60 years of age. For those of you that are 50 and above, the vaccine should reach Mexico around the months of April and May. For those of you over 40 years of age, you should be able to get vaccines during May and June. And Godofredo, who I presume is close to 20 years old or something like that, he looks very young, that should be happening until the second half of 2021. So these, again, are not promises that are going to be fulfilled at 100%. These are more or less the expectations that the Minister of Health in Mexico has. Now, the interesting thing is how exactly these vaccines are going to be reaching Mexico, and through these vaccines, if trying to figure out if Mexicans are going to accept these vaccines right away, or maybe take the decision of waiting until a more reputable lab has offerings in Mexico. You can see, for example, month by month on the left graph that during the month of January in Mexico, only 700,000 vaccines were available. Mexico has a population of close to 130 million, by the way. So 700,000 is a very, very small amount. During the month of February, we are expecting at the beginning, in the first half, only those vaccines from Sputnik, which will be close to 400,000 doses, will be available in Mexico. We are expecting another 700,000 from AstraZeneca, 900,000, I'm missing one, no, sorry, 2 million. Sorry, I got confused. It should be, yeah. I forgot to mention one laboratory. That is very important. There is a consortium called COVAX. COVAX is a consortium of labs, but also of countries. Countries put a lot of resources, and labs have been trying to develop as quickly as they can these vaccines. In those countries, like Mexico, that are a participant of this consortium, as long as we see a rollout of vaccines by these labs, that includes Moderna, and Sanofi and AstraZeneca, we should be expecting some of them to reach Mexico over the next months. And we are expecting close to 2 million of these vaccines reaching through Pfizer, 900,000 through AstraZeneca, then another 700,000 again by AstraZeneca, but through the consortium, and 5 million vaccines, the most important of these vaccines for the month of February, coming out of CanSino, the Chinese company. That vaccine is not approved in Mexico. The Ministry of Health has not said anything about them, but if it's not CanSino reaching Mexico in February, the rest of these vaccines seems to be coming to us at a very small amount. Now, the peak of vaccines reaching Mexico seems to be during the month of May. That, again, if I go back a couple of slides, is when the most important part of the population in Mexico, in terms of value added, of economic value added, people over the range of 50 years old, that's when we are expecting the vast majority of people to be vaccinated. So for the Mexican economy, we think that the first quarter, January, February, and March, will still be full of challenges in terms of GDP growth. Let me just go to this slide. I think it's probably interesting. You can see to the left a map of Mexico and our 32 states according to the most important economic sector in each of these 32 states. The ones in blue are mostly focused on manufacturing. I'm pretty sure that there's some people here in the audience, for example, from the state of Guanajuato, that has a lot of manufacturing, from the state of Jalisco, of course, in Ajijic or Puerto Vallarta probably, that is also focused on manufacturing as its most important economic sector. But Mexico is a very diverse economy, has a lot of complex production chains. And what we can see now to the right of this slide is information provided to us by Apple. Through our iPhones, Apple is capable of following our mobility patterns. That information is public. Don't worry, we don't know exactly your phone number. It's more aggregate information by cities. And what we saw in Mexico is that once the holidays during the month of December reached our country, there was a very important spike in mobility. Basically, everyone went not only to supermarkets, but maybe to malls to buy gifts. And because of that, the rate of spread of the virus caused a lot of havoc. We saw that the country needed to go into a more or less generalized lockdown. And mobility nowadays in Mexico is, for some regions, as low as it was during the summer of last year. But it is particularly higher, the amount of mobility decreases, in those states that are mostly focused in services. These are the states of Nayarit, Baja California Sur, Quintana Roo, and Yucatan. And among northern states, and particularly those along the border, all the way from California, Arizona, New Mexico, and Texas, with the exception of the state of Tamaulipas in Mexico, those are the states where we are seeing the highest rates of mobility. I guess it kind of makes sense because some of the Mexicans living along the border will have access to vaccines in the U.S. Some of them are American residents, some of them have simply access to health services in the United States, and these are the regions that we are expecting to provide the most economic impact, positive economic impact during the first quarter. And the rest of the states in Mexico, maybe we won't be seeing some sort of normality until probably the second quarter of this year. So let me summarize all of this into this table. I'll finish with this, my presentation, but if there are any questions, I'm pretty sure that we have enough time towards the end. What we are expecting, first of all, for the U.S. economy in 2021, we have among the most positive forecasts for economic growth at a rate of 3.9%. It's even higher than what most people are expecting because we think that there should be even more fiscal stimulus in the U.S. And now that Biden has won and the Democrats have a control in both chambers, probably we should be expecting close to $1.5 to $1.8 trillion being injected into the economy, even as soon as the first quarter of this year. We think that in the U.S., we will be seeing some inflation upticks in 2021, not only because of some recovery in economic activity, but because we are also expecting oil prices to increase around the world. We are actually forecasting $51 to the barrel for West Texas Intermediate barrels. And in spite of that, we are not expecting the Federal Reserve to increase rates. Rates are now at 0%, and we expect those rates to keep at that level, maybe not only towards the end of 2021, but most likely even towards the end of 2022. So we are still going to be facing an environment of very low rates. Translating that into the Mexican economy, we think that Mexico will be growing this year 4.5%. Don't get too optimistic with this number. It means that only half of what we lost last year is going to be recovered in 2021 if we are correct in these figures. Now, because it's a low growth environment for our country, we are expecting inflation in Mexico to be comfortably within the range that the central bank prefers. We have a range between 2 and 4%. I think it's difficult for that inflation level to go upwards of that level, and that should give the opportunity for the Mexican central bank to cut rates from the 4.25% that we have now, maybe about 50 basis points, to have a rate of close to 3.75% very soon. Maybe as soon as next week, we should be expecting a 25 basis point cut, and then maybe even the opportunity of another rate cut during the month of March. And the most important number that most of you are trying to figure out is what's going to happen to the Mexican peso. The short answer is, who knows? It's among the most liquid currencies among emerging markets. We think, or I think, that during February and March, right before the volatility of the election cycle reaches our Mexican markets, that a more or less fair level for the Mexican peso should be close to 20 pesos to a dollar, the rate where we are now. But we would rather wait until we see the end result of the election, who controls the upper house and the lower house, who controls individual states around the country, until we have to wait until that so that we can make a more accurate forecast for the second half of the year. So right now, we think that the Mexican peso is going to be stable, but if you give us the opportunity, I think it will be a very good idea to meet again towards June, maybe mid-June or late June, to talk about again the result of the election. So with that, Bodo, maybe I can give you back the microphone.
Hi, everybody. Thank you for having us and sharing some time, some precious time of yours with us. Thank you, Enrique, for our presentation. I'm going to try to take advantage of some of the topics that you just spoke about and try to transmit some investment ideas. And hopefully you can take advantage of them on managing your money for the next year in Mexico with us. I don't know if we have a presentation, because we should. Oh, great. Thank you very much. So the idea of this couple minutes that I'm going to have with you is just to advise you on some of the topics that we are right now seeing in the asset management. As investment professionals, as you know, we try to adapt our strategies to the global and local environment. And that's a hard thing. I mean, as Enrique mentioned, there's a lot of gray stuff going on, and maybe more than the local markets rather than the global markets. We've seen some acceleration in the economies globally. That's not been the case for Mexico. And I believe that we're going to have a way much better second quarter, hopefully. But just to try to dig into investments, we're gonna show you a couple of our flagship products. Actigana Más and Fondo Máximo are one of our unique investment opportunities. We've generated these ideas and investment portfolios just to adapt to any of the circumstances, and we try to see them like all-weather funds for Mexico. So there's always a silver lining. Mexico has one of the countries with little bit of real rates, and that's what we are trying to look for in this year. Just trying to keep your purchasing power in Mexican pesos, which is very important. As you can see, global rates are near to 0%. Here in Mexico, we've seen the expectancy of the market is to have rates around 3.5%, with inflation near the same. So real rates are merely positive in the short term in Mexico. If you add some of that duration into your portfolios, you're going to find some positive real rates, and that's very, very unlikely in the rest of the world. Having said that, Actigana Más, and I'm going to go through the product. If we can change slide, please. Actigana Más is a Mexican corporate debt fund. We've generated this unique product that gives you fixed payments every month. So once the offering is open, and we're going to have this offer open in the next 3 weeks. Actually, the opening period is at the end of February and the beginning of March. You're going to have a fixed payment for a full year on monthly basis. And the idea is trying to cover this real rate to keep your purchasing power, as I told you. So these monthly payments are determined at the beginning of the subscription period. They're going to have a premium to the 28 days at the rate, and that's because we're taking some corporate risk, a very, very highly diversified portfolio with all the requirements for you to feel safe in an investment profile. And given that the fund strategy is made of corporate debt, you're going to have some risks on the development of these companies in the year. I mean, the process is basically made to capture opportunities in the market with stable risk. So the idea is for you to have, if you can compare this to renting the house or just receiving fixed payments at a month, this is an ideal product for you. Actigana Más is one of our flagship products. As I told you, it's been awarded for a couple of years as the best performing fund in the debt category. So I guess this could be one of the products that would solve your necessities and trying to stay focused on a great diversified corporate portfolio with fixed payments and a full year rate of return that should be way north than the CETES rate. So maybe if we can go to the next slide just to show you the performance of this fund and how have we solved the strategy. As you can see, every year now that the blue bar is the CETES rate, and then you have in yellow what we have delivered as a full rate of return for the fund. So as you can see, every year we have, and we've been outperforming the CETES rate because of the corporate profile, but we've been doing that with a lot of responsibility and with a highly diversified portfolio that basically, aside from very specific corporate events in Mexico, it has never suffered something negative that could make us deliver less than we expect the expected return that we had. So for 2020, we've delivered a rate of 6.25. The CETES rate in the average of the year was around 15%. As you can see, in 2019, we delivered a 7.50 rate. So it's a very, very competitive product with high visibility and high stability, as you can see. Another of our flagship products, if we can change the slide, please. Thank you. Is Maximo. Maximo is a fund that's seeking to solve the dilemma of holding pesos or dollars in 2019. As Enrique said, we would like to know where the Mexican peso rate is going to be, or the FX rate versus the US dollar. We believe that the US dollar is going to keep weakening, but since we have very particular things occurring in our country in this year, we don't have the full visibility to advise you on staying on pesos or dollars. So this is the dilemma that we solved with Maximo. No, we set an expected rate of return, a minimum expected rate that should be close to CETES. But on the other side, you have this actionable process that if the peso depreciates, you're going to participate on that. No, and I believe that's a product that's going to solve some of your necessities, as you have hard currency. Some of you have hard currency in your portfolios, but you live in peso terms. So the idea for this is just to have a minimum expected rate, and then letting the fund process and investment process to deliver some of extra yield because of the structure of the portfolio, and then to capture some of that mobility, some of that depreciation in the peso. What happens if the peso appreciates? You're going to basically have your minimum rate or the expected minimum rate, which takes care of you. And on the other side, if we have a huge depreciation of the peso, you're going to be kind of covered of that. And if we can go to the next slide, you're going to see how we've delivered some of these returns. This is a pretty new fund. It has delivered very, very nice rates under the last periods. It's very unique as well in the market. So as you can see in the first period, this is a fund that works in 3-month periods, quarterly periods basically, a closed-end fund for quarterly, and then you can renew for the next period, or you can just leave and take your money to other strategy. But for the first period, I mean, the reference rate was around 7%, and we delivered at 10.9%, and that's because you can see the FX rate. We have devaluation of the peso, and the strategy just basically captured that, and you can see we delivered at 10.29. In the other side, we have in the second period, the FX rate appreciated, and the reference rate was around 6.75. That was our expected minimum rate. But we delivered a way much better rate, around 8 and 8.67. As you can see, in every period, we've almost delivered extra carry for your portfolios, very nice extra carry. So you can be part of this, of taking advantage of the local rates, which deliver some real rates, as I told you, and then being kind of hedged and protected in a case of a depreciation of the peso. So I think this is a very, very nice product for you guys. We are also in the opening the period of investment in Maximo in the next couple of weeks. So you should ask your investment professional just for any more information you like to. Having said that, that would be the part I would like to share with you in pesos. These are some of our best ideas for the year, and we'll be promoting this with most of our clients here in Actinver. They are highly demanded products as well, so please speak to your advisor about being part of this strategy on the right time, because capacity is sometimes limited, so we can handle and deliver these kind of results. In the other hand, can we change the slide, please? Thanks. I'm going to speak about some strategic alliances Actinver has in the market. And these are very unique products as well. These are in the side of the equity market, and I know that some of you kind of or try to be more focused on the fixed income side, and that's maybe your risk profile. But as Enrique told you, I mean, with this massive monetary supply that we have right now in the markets, you can see this liquidity has been affecting the risk assets basically in the whole world. That's where we have the global indexes making new all-time highs basically every day. And that's how liquidity works. No? If you cannot get yield from your money in any other place, you just try adding some risk to your portfolio to get some of that yield. And having said that, we have some amazing products here in Actinver, strategic alliances that we have exclusively for us that are booming right now. And it's just because we thought that speaking about things is easier than speaking about indexes. And we have these 3 products that I'm going to show you right now. So this is a fund that we distribute in Actinver. It's managed by AXA Investment Managers. This is an highly experimented investment professional globally, and we have this digital economy fund. How does this work? This is basically fund invests in stocks around the world, and the idea is to capture these growth opportunities in the market. As Enrique just mentioned, I mean, mobility is now a full theme. Godfrey, can we just change slides, please? Thank you. Thank you. So as you can see, this is the actual economy, or what we see as more of a futuristic economy, if we could be seated from 5 years from now. No, automation has been a big theme in the world. We've seen this factory industrial orders just highly demanded in human capital. And now if you go to these fabrics and car manufacturers and some of the health manufacturers as well, you're going to see a lot of robots there. So this is part of the automation and the evolving economy. Clean tech has been a big theme also. After several years of European subsidy, clean energy is now very profitable as an investment, and you're also kind of helping the ecosystem where we live and we should take care of. Transitioning society, demographic is a big theme, and therefore healthcare has been one of the highest demanded sectors. As you can imagine, now that we've been through 1 year of the worst pandemic we've suffered in history, healthcare is going to be needed as a theme for the next years. So if you can just wrap up this digital deal, this evolving economy, or what we see is evolving economy, and you can be part of that. And this is what this fund basically offers to you. You can go to the next slide, please. Yeah. So this is an unconstrained fund. It has basically around 60 to 40 stocks in their concentration or in their portfolio. It has delivered returns. Sorry, can you go to the next slide, please? It has delivered awesome returns, as you can see. No? There has been a relative excellent performance through the MSCI World Country of around 18%, which is basically doubling up. And the AXA Digital Economy Fund has delivered 28% versus 10% in the last 3.5 years. So it has been a great return. And as I told you, I mean, these kind of trends, these secular trends, we believe we're gonna stay with them. As you can live right now in your lives, e-commerce is a reality. Social media for business is a reality, and as I told you, clean technology, because you would never imagine business travelers just shutting down, staying in their houses as us, and sharing with you this one of these workouts with you via practically just everybody staying in their home. So Zoom companies and e-commerce companies, Amazon, et cetera, you're gonna have shares of that in this portfolio, and we believe this is going to be a theme that's going to be highly demanded for the next years. Also with AXA, we made this with this alliance to have this exclusive fund, and this one is just based in robotics. And as we change the slide, please. And as I told you briefly before, this is another theme that we see as a secular trend. I mean, look how the worldwide annual supply for industrial robots has been growing amazingly in the last 6 to 7 years. No, and before that, we saw some of the units grow, but there wasn't an assurance this was going to be a reality, and now we have seen it. We have a lot of visibility that the demand for robots is growing and growing and growing, and you can see that this is not only for industrial needs. No, as you can see, and you can think about cars and transportation and mobility. As people in the world get older and there's an aging population, they need mobility, no, and they need cars, and they need self-driving cars, and that's basically robots, no. So this mobility and transportation and aging population theme is great for robotics, aside from the industrial, and also healthcare. You have these Da Vinci robots now making surgeries, maybe in Melbourne, in Australia, while the robot is just replicating the same surgery in California. So it's amazing how the healthcare industry has been growing in the last years, side by side, from taking advantage of robots. And some of these technology enablers are just maybe software and semiconductors and some specific components for the industrial production and healthcare. So then again, we believe that some of these old businesses are just evolving and in the need for robotics and automation. We do not see that coming back. I mean, this is a real secular trend again. Most of the themes that we are talking about, the visibility is very high as an investor, and we just need to form the specific portfolios to take advantage of the opportunities. We go to the next slide, please. Actually, to the next slide, please. But I'm going to show you also some of the return. As I told you, here are some of the summary. I mean, this is what I just spoke about, the industrial, transportation, and healthcare uses of the automation, and then the technology enablers, as you can see. And then the returns that we've seen. This is one of the best performing funds, or the best performing fund that we had in Actinver for 2020. It delivered, sorry, can we go to the next slide? Delivered a 48% return. It's also the formation of the portfolio is basically around 40 to 60 stocks, the same as a digital economy. You're going to have a very, very small concentration on one stock. It's a highly diversified portfolio, as we usually do. So you're not going to suffer from a very specific event and putting some very, very highly risky bets on only one stock. It's completely the opposite. So you're going to have a big universe of stocks dedicated to this thing. The returns have been amazing. Can you go one more slide, please? As you can see, the last year was very impressive for this fund. We delivered around 48% in peso terms. That's around 33% in US dollar terms, which has been great for our portfolios. We're taking advantage of this unique strategy to add into our multi-strategy, multi-asset portfolios as well. So I believe this would be a nice advice to put some of your money. I mean, depending on your risk tolerance, but I think that you should put around 5 to 10% in some of your portfolios and just ride these amazing themes and secular trends. The next one, please. I'm going to just add a couple of minutes for this healthcare strategy. We manage this specific strategy with Franklin Templeton. We also have this as an exclusive product for our clients. And this is basically based on the aging population reality that we're suffering. As you can see, the developed markets have this aging population, and the need for healthcare has been huge. And that's just being, if you would be way back in time, back in 2018, it sounded like a real premise, no? That the aging population. But now that we have found out that the world is exposed to this pandemic or these huge viruses, and the needs for that acceleration in developing new patents and new vaccines and all of the related stuff to healthcare and the needs of human beings, you're going to be invested in that kind of companies. So this is also long-term buy and hold core portfolio. It's gonna be a little bit more concentrated than we saw in the other two strategies, but that's because the universe of stocks that we have in healthcare is not as wide as the other sectors. So there's a highly concentrated industry. I mean, everybody's thinking around the world right now about 3 or 4, maybe 5 vaccine developers, but that's for the whole world. So as you can see, it's a highly concentrated industry. The entrance of barrier are very high, and this has delivered amazing returns also. And we believe that in the next years, this is going to be one of the hottest themes to invest in. I don't know if we can go to the next slide, please. Great. So now you can see some of the stocks that are actually in the portfolio right now. As I told you, it's a little bit more concentrated than the rest. In the first 10 holdings, you have basically 50% of your portfolio. and that's basically the well-known names that you know in research and development for vaccines or healthcare components. The next one, I'm going to try to touch on the returns and yeah, thank you. So since inception, this fund has delivered alpha as well, no? And this, as you can share versus, as you can see, versus the MSCI, the benchmark or the comparable index, it has delivered since inception around 250 excess return from the index. But look at the last year; it's amazing. There's a lot of money coming into this theme, and I don't need to tell you why. Hopefully, I've transmitted why. But we believe that this is going to keep going and going on for the next years. Just taking a benefit of time, I think this will be the strategies that I wanted to share with you as an advice. Please go talk to your advisor if you want to learn more about the strategies. But we believe, and we have been recommending this to all of our clients as one of our best ideas for 2021.
Thank you, Diego, and thank you, Enrique. We will surely have a second conference later on this year, as Enrique mentioned. We'll all be looking forward to it. I would like also, we have a series of questions that I'll be giving to Enrique and to Diego. Before going to the questions, I also want to invite our audience to, if they have any specific additional questions than these, to contact their financial advisor or send us an email. Right now we'll have some emails on screen, and we'll be more than glad to answer these questions and clarifying any doubts. No? The first question that we received goes more to Enrique, that is, when should we expect interest rates to increase in Mexico?
Oh, that's a very difficult question. It's a long way ahead for that to happen. I think that, well, okay, I worked at the central bank for many years before joining Actinver. And the rule of thumb that we had back there was that once rates went down, it was almost impossible for rates to go up within a time length of about 6 to 9 months. That's the very minimum. Now, given that, there is a strong possibility that rates will continue to go down during the first quarter of this year. And after the election cycle, depending on who wins, there could even be more room for them to go down. I do not think that we will see them going up at all during this year. What could change this point of view? Of course, if our currency, somehow we get our forecast wrong, and that we see very, very strong pressures for the US dollar to stop weakening. For example, if something happens among Democrats, that they have fights with each other and no more fiscal stimulus comes forward, that could happen. It could also happen if something happens with oil prices that makes public finances in Mexico to be in a tighter position. But right now, I don't think that's something that we should keep in our short-term scenarios.
The second question that we have here is related to investing in the Mexican stock market or the global markets. I don't know if Diego can talk more about this. And he also already started talking about it when we were talking about the fund. There was another question before answering the question, Diego, that the last fund that you were speaking about was the Salud Fund, correct?
Yeah. That fund's name Salud, just as in health. It's basically a translation. Yeah. And for the Mexican market, sure. I mean, hopefully I'm not locally biased as everybody else. Mexican stock market has delivered lousy returns for the last 10 years, and that's a reality. Also, in the last 10 years, Mexico had a mild growth economically, different cycles, but mild growth. And the EBITDA of these companies have been growing steadily in the last 10 years. So what happened is that most of the last 10 years, we traded very expensive on relative terms versus the world. And now we have kind of cheapened a little bit. We cheapened a lot in the last year, actually, in the last 12 months, but that's kind of going back to the median. We see a lot of opportunities in Mexican market, actually. In broad terms, just being invested in the broad market could be not the best performing asset of the risky assets, of the overall risky assets. But in specific and individual names, we're seeing huge discounts to global peers. So if you can extrapolate our blue chip companies to the global multiples that these sectors are trading globally, you're talking about 30 to 35 discounts on very, very robust companies. And I'm speaking about 5 or 6 of the healthiest names in the index, and that's basically AMX, Jefe Norte, Grupo Financiero Banorte, FEMSA, another couple of bottlers, airports. So we have very, very specific individual names that I believe they're going to deliver above 20% returns in the next 12 months. So my advice would be taking just active positions directly on the market if you're able to do that. If not, we have an active fund in Mexico that is called Maya, and that basically takes advantage of these opportunities in the market. It's not a passive fund. It does not replicate the performance of the index, but it takes active bets just trying to position in these opportunities. So I think Mexico is going to deliver good returns finally. It hasn't in the last 10 years. It's very lag versus the global benchmarks. And I think that the fundamentals are there. Either a lot of our companies sell just basically abroad, 40 or 60% of the sales are abroad. So you're going to have some benefit of that U.S. acceleration. And I think that's going to be reflected on the prices of the Mexican companies.
The next question that we have is related to, it's a tough question to answer, Enrique, and it's regarding what to expect towards the midterm elections here in Mexico, and what will we be seeing on regarding exchange rates and the markets.
Oh, do we have another couple of hours? Let me try to summarize that in a couple of minutes. 3 years ago, when we had an election in Mexico, there was a very important uncertainty regarding the rule of law in the country. Most of the problems that were faced across the land happened to be related to insecurity, to corruption, to those topics. It doesn't matter what state you look at, with the exception of one, which is the state of Guanajuato, everyone voted for a change. A change at that moment meant voting for Morena, the party, against voting for the PRI or for the PAN parties. Now, I think that from this unique topic that we faced in 2018, we are going to be moving to a more individual municipality by municipality context. Maybe as an economist, I try to think it moving from a macroeconomic election to a microeconomic election. It's too early to talk about that because pre-campaigns are happening right now. The next step for this election is that if parties want to go in a coalition, they need to register with the Electoral Institute this coalition, and only once it has been approved, this will happen during mid-March, around mid-March, I think. Until then, we will know who the candidates will be. So it depends a lot on who these candidates are. So I think that maybe this topic is better to be addressed until maybe the beginning of April. Having said that, I know that maybe people are expecting me to say something, at least in the direction of where the election is going to be. I personally think that people are not going to be very happy with the economic environment. It reminds me a lot of what happened in the United States. Right before COVID, the economy was booming in the United States. Stock markets were doing fantastically well, as good as they can possibly be. But people, once the economic cycle goes downwards, people start to think about whether they have enough money in their pockets or not. And if they do not, then they try to vote for a change. I think that the economy in Mexico is the perfect situation where people are going to be expecting a change. But what that change will be will depend municipality by municipality, voting against whatever party is in power. Maybe the most likely scenario is that we should see a shift from the left more towards the center, at least in the general ideology. That doesn't mean that Morena is going to lose power. I just think that they are going to be moderating a lot more their discourse, and right now the election is completely open.
One last question that repeats itself is asking if it's the proper moment to bring more funds from their countries into Mexico, into Actinver. And I think that I can start answering this question by saying that now, through the advantage of having different US dollar investments through the in equity and also on the money market side, we're able to, there's no perfect moment, but ideal moment. You can just do it anytime, bring the funds, have those in US dollars, and then you can follow whatever strategy you're looking for, no? I don't know if Diego has something else to add regarding this.
Sure. I mean, it's always good having your money close to home, and having your advisor close to home. And I think with this full offer in US dollars that we have, and we just showed some of it to you, I believe it's a good idea. Aside from the specific peso US dollar question, we believe that the US dollar is going to be weak for the next 12 to 24 months, maybe. And that in normal terms should keep the peso appreciated. So aside from some internal specific moments that Enrique touched on, I believe that the Mexican peso is going to be also strengthening in the next 24 months, 18 to 24 months. So you could take advantage of that right now and just put some of that money to work here in some more interesting yields than you have in the US. And we tend to think that having money in US dollars is a nice way of a capital preservation strategy, but we're here to maximize your capital. So we believe that you can take advantage of the carry trade in Mexico rather than just being in zero rates in the rest of the world.
Okay, well, we'll be finalizing our presentation with this. I thank you again, Diego and Enrique. Really looking forward to having our next conference later in the next half of this year. And thank you again. And thank you all for logging in. And you have the email addresses, telephone numbers on screen for any future questions. Thank you again. Bye-bye now.
Bye-bye.